Gang, it's your boy Nature, aka Nature. Alright, so let's check up on this trade. Alright, on this part 3 on how to trade in the demo, how to use all the indicators. We already went over SRI. Alright, so let's see what happened as far as this trade is concerned. It's 8 o'clock, 9 o'clock actually. London session started by now. I mean, the New York session has started by now. So they say the New York session is the most volatile session out of all the sessions, because it has to do with all the United States traders and stuff. London traders are in London, so the New York session for USA. Alright, for US traders and stuff. So the New York session gets, it be moving. I woke up a little early, a little late, but still, they were still in profit. Like I said, you check the daily. This candlestick that has gotten a little bigger, just a little bit from earlier. We're hoping this candlestick can, close above 1.0355. That's what we're hoping this candlestick can close above, and we can continue that for for the rest of the week. We can continue going up. So let's just look, see what happens. Let's go down to the 15-minute chart. See what's happening. It was consolidating. It had a nice little run right here. Then it started consolidating, went back down. It started consolidating, and then it looked around this time this morning, it started going back up. To check which direction the trend is going, we check on the 4 hours. For the last 4 hours, they've been going up. So we check on the 4 hours, see the hour chart is doing the hour chart, same thing is going up on the hour chart and the daily. So then it's going up right now. So this will just hold off until about like 12 o'clock. It's about to probably start booming more around like 10, or right now, around like 12 o'clock, 1 o'clock. That's when things start slowing down. When you see a wick on the candlestick, when you're looking at the daily and the 4-hour candlestick, and you do see wicks, that means that sellers are trying to push price back down. Okay, that's what that means. When you start to see wicks on a green candlestick, it means that sellers are trying to push the candlestick back down, but obviously buyers are in control and are fighting to keep their position and push price higher. Okay, for the day it is going up. This candlestick, like I said, is only 1/4 of the way filled. We can check up on it later and see how this candlestick turned out. But this candlestick should go all the way up. It should close all the way above, making a long green marbozo candlestick. Meaning marbozo meaning that, and green meaning that buyers were in control of the session the whole entire time. It opened right here to make it the wick. It opened, then it went down, went back up. It made that wick, and now it's going back up. It opens from the bottom. But on a green candlestick, it opens from the bottom. Then it goes down, creates a wick, goes back up. Once it creates that wick, it's not going back down. Usually once it creates a wick like that, now we're opening. Now price it opens at the bottom, goes down, makes this wick, goes back up, and now we're waiting for price to close somewhere. It's still early, so remember how to read the RSI. If it's at the 50 mark and it's above the 50, between 70 and 30. So it's at the 50 mark and it's above the 50, and it looks like it's getting closer to the 70. Yeah, we're in an uptrend. But you see it start going towards the 30. We're in a downtrend. Let's see what else we can do real fast. Let's look at Fibonacci. You look at Fibonacci one more time. Fibonacci retracement. Hold up. I didn't think I drew that. Look at Fibonacci one more time. Real fast, I'll draw it. Remember the last, it was in a downtrend, so keep that in mind, it was in a downtrend. So we're going to draw from the swing high to the swing low. As soon as I can get this on here. Here we go, swing high to the swing low. It's right here. When price stopped. Okay. Prices went past the 50 extension mark, so now we're going closer to the 61.8 mark. Price could, stop at the 61.8 mark, and that's when it might look like it's heading for the day to the 61.8 mark. Once it gets to the 61.8 mark, it looks like price is going to, for the day, it looks like it's going to stop there at the 61.8 mark. That'll be at 1.40070, so we will check that out later on. But Fibonacci, you remember it was in a downtrend, so for the last couple of days it was in a downtrend, so it's now in an uptrend. This could be a retracement, it could be continue headed back down as far as the overall trend is concerned. Price likes to do that, so right now it's at the 61.8 extension mark. So probably, 50.0 extension mark. It actually went past it a little bit. So now we're the next retracement level. We're expecting the price to retrace back at 61.8. We'll retrace back to 61.8. That's where I think price will stop at 61.8, 1.40070. So yeah, you use Fibonacci, use everything. Moving average. Like I said, the candlestick is still, when it's on a 4 hour, it's right at the, it's just starting to pass the 50. As you can see, the 4 hour, another candlestick has formed, going past the 50, getting closer to the 61.8 extension. But, I was saying, as long as it's moving average, how to trade the moving average is if the candlesticks are above the moving average line, then we're in an uptrend. Okay, if it's below the candlestick line, if the candlesticks are below the moving average line, then we're in a downtrend. See how it was below? We was in a downtrend for the last couple of days. Now the candlesticks finally rose above, and then you see the moving average crossover right here. Now the candlesticks right here, moving average crossover. You could even gotten like right here, 1.38270. Let me see what else I can draw. This was a mini consolidation right here. I'll draw this for you real fast. It was just a mini consolidation. Just a mini consolidation, not a big one. Just a mini consolidation right here. Right here. This was a mini consolidation right here. So we would wait for price to break this box. Once price breaks this box, boom, we will get in. As soon as price broke the box, because it was in a little mini consolidation right here, it broke the box. Candlesticks above the moving average. RSI is getting on a 4 hour, getting close to 70. So it's it's an uptrend. Even got Fibonacci. retracement levels. So that's on the 4 hour. Little mini consolidation right here. It finally broke when it made this this bullish engulfing pattern. When this green candle started engulfing this red candle, that's when that box broke as far as on the daily chart is concerned. Alright, let's see, turn it this way. Yeah, as far as the daily chart is concerned, price broke. See, on the 4 hour, it was a mini consolidation. Price didn't break that. On the daily, it broke that consolidation. On the 4 hour, it broke the consolidation too. It made three white soldiers. We went over that already. You see the 3 candlesticks back to back. It's called 3 white soldiers, but it'll be like 3 green soldiers because the colors are green. It's still 3 white soldiers, no matter if it's green or white. Once it made that pattern, boom, that's a 3-day continuation pattern, meaning the price wants to continue. Another little mini consolidation right here. You can even say another mini consolidation, like right here. Then price broke that. So you can draw little mini consolidations. If you miss this entry, the next one will be right here. We would draw another little box right here. This will be another little mini consolidation right here. Once price makes this green Merbozo candlesticks and it breaks the consolidation box, makes this green Merbozo candlestick, we would have got in. So you just how you kind of like figure out when to get in. Price consolidated, finally broke the box, boom, get in. Alright, price was consolidating right here, finally broke the box, boom, get in. Alright, same here, consolidation, price broke the box, get in, boom, you're in profit. Alright, so if you missed the trade, alright, on a 4 hour chart, so that's just, this is how you use, the indicators, and, in MetaTrader, you don't have to go to TradingView.com to use the indicators. They're all in here. So, yeah, right now, price is going up for the day. You check if it's going up for the daily, and you just stay in this. You just let it ride for the rest of the day, or till you feel like you reach your take profit. Whenever you feel like you reach your take profit, depending on the trade, you could day trade it or swing trade it, for a few days or maybe even weeks, depending. So that's it, really, gang. Like I said, it was going up. It's going to continue going up for the day. This, like I said, you see how this candlestick is getting bigger now. You check the 4 hour and you check the daily. Even the 4 hours is going up. So, like I said, if you plop the Fibonacci on there one more time, you can tell where price might stop at next. So you can just pop it on here one more time real fast. Fibonacci retracement from the swing high, right, all the way up to the swing high. Ooh. To the swing low right here. Price is at the 50 extension mark right now. You can see a little bit. My camera's acting like this. Actually, let me just log out real fast. Let me just back up out of this. And we can just do it one more time. Close this. Trader 4. GBPUSD. Make sure you find your pair that you like to trade. Draw the Fibonacci one more time for you. Fibonacci retracement. Boom. From the swing high. want to drag that. Come on. Draw it again. Yeah, let me draw it again because it's not sticking. Yeah, all the indicators are in here in MetaTrader 4. You don't have to go to TradingView no more. TradingView is still good, but you know it's all in MetaTrader 4. So Fibonacci retracement from here, and you want to drag it down if it lets me. Jeez. Having technical difficulties here. Okay. Doesn't want to let me. Try it again. Fibonacci retracement. Boom, there we go. The theory behind Fibonacci retracement is that, you know, if it was in a downtrend, the theory behind this is that price is going to retrace to one of these levels before either heading back up, continuing the overall trend, which was the downtrend, or, you know, a trend reversal. It'll break past 61.8 and start going closer to 100, the 100 mark. Today's Thursday. We got tomorrow. Well, today's Wednesday. We still got tomorrow, which is Thursday, and Friday to see where, you know, if price wants to head back down as far as the overall for the overall trend. So for today, it looks like it's going to close at the 61.8 mark. As it's getting closer and closer to it, it's barely right there. It just looks like it might it might just be a retracement. Might not even be a new trend reversal. As you look at the overall trend, was in a downtrend. So the theory behind the downtrend, price will reverse to one of these resistance levels: 61.8, 50, 38.2, 23.6, and 0 before heading back down on a downtrend. I'll show you an example of price in an uptrend and seeing Fibonacci retracement later on in another video. But right now, price has retraced back to 61.8. We'll see, you know, in later on videos, I'll bring this video up again, and we'll see where price ended up heading at for the rest of the day. Alright, so gang, this is how you trade indicators and Forex, and, you know, how to do demo trading. You could make a couple dollars off the 50 cents or 20 cents, you know. Already in 50 profit, you would close that out, and you just made 50 for the day. Okay, times 50 times 25, that's almost like $3,000 right there a month off of just $50, you know. That's about like $2,000, $2,500. Okay, so that's not bad. Like I said, I'll have more videos to show y'all how to, you know, how to use all the tools and everything and make money in this market. Alright, so it's your boy Nature, aka Nature, gang.